Well, folks, here today we got to talk about not the most fun subject in the world. We got to talk about if I made some really large mistakes here with certain stocks. And we're going to talk about three stocks in particular in this video here today. And we're going to talk about not really the bullish thesis on these stocks. We're going to mostly talk about the bearish thesis and what are the chances essentially. What would it take for me to not just be, obviously on all three of these stocks we're going to get into today. I'm down huge on all three of these stocks. But what are the chances that several years in the future, we go into the future, and I'm still down on these stocks, maybe even more than I am now, right? And so I thought this is an important subject to talk about because, like I said, usually we talk about the bullish thesis and why I'm bullish on stocks. And I'm going to share at the end of this video my 3-year out price targets for all these stocks and why I think they're going to go to certain prices. But the main core of this video is going to be, man, maybe I made a huge mistake and maybe like these stocks are still down huge like years from now and we fast forward, right? I'm always thinking about a 3 to 5 year time frame when I'm investing in stocks. And so it would hurt me if I'm, we're 3 years in the future and I'm still down huge in these stocks. And I think all three of these stocks you guys will know about in this video because I talk about these stocks a lot, right? And these are very, very core positions of mine. I've bought heavily into these stocks. And yeah, if you're subscribed to the channel, you know these stocks. By the way, if you're not subscribed to the channel, consider doing so. Hit that subscribe button. It's absolutely free. And also consider getting yourself some free stocks from Moomoo. They got a welcome bonus right now. Get up to 5 free stocks and a TTCF share with a $100 deposit. So speaking about TTCF, that's one of the stocks I own that I've gotten absolutely decimated on, right? Down 30% on the stock, down 361,000. And keep in mind, all these stocks I'm showing you here, these are all screenshots from my Big Dog account, but I've got more shares in other accounts, my public account and other accounts as well. And so this is it's an ugly situation, and in hindsight's perfect, right? Like I wish I would have started buying Tattoo Chef right now instead of many months ago, right? Because I'm down 361,000, down 30%. But hindsight's always perfect, right? And if the stock had been beasting and the stock price had been going up, then I'd be like, well, why didn't I buy into that stock, or why didn't I buy heavier, right? So that's just kind of the risk I'm always willing to accept. 30% down's a big number. It's a big number. Usually I expect to go down anywhere between 5% and 20% on a stock after I buy, right? 30% is a bit much. I will be honest about that. Honest, same exact thing, 31% down, $145,000 down on Honest. And then Corsair Gaming, the third of these three stocks we're going to get into, down 46,000 here. And like I said, all these stocks I own in other accounts as well. So all these numbers, believe me, they're bigger than this, okay? So first thing I want to talk about before we get into the chances of these stocks and what would have to happen for these stocks to still be down in 3 years from now versus like going up and things like that. And before we get into my 3-year price targets, I want to talk about why these stocks have gone down, because it's got to be reasons why Tattoo Chef's down 30%, Honest, and those sorts of things, right? When it comes to Chef, there's 3 core reasons why I believe this stock is down the way it is, right? One is they postponed their last quarterly report. They had to postpone it last minute, and they all of a sudden finally came out with numbers like a week or two later. There was just a bad look. That's not a normal thing that happens in the market where all of a sudden last minute a company has to postpone quarterly numbers. And so when you're a newer company to the public markets, which Tattoo Chef is kind of considered a newer company because they haven't even been public for like 2 years or so when they postpone those numbers, believe me, everybody's kind of keeping an eye on you, and if you do anything that is seen as shady or, weird, they're like, oh boy, I don't know about this. So when they had to postpone that last quarterly numbers, there was a lot of shareholders that just sold out and like, you know what? I'm out of this stock. I don't know if I can trust it, okay? And I can understand from their standpoint on, wanting to get out, especially if you weren't the biggest believer in the company. Like, let's say this wasn't like a core position of yours. Let's say it was like your 8th biggest position. And you're like, and they did something like that and you're like, I'm out of this stock. I can understand for some people that was just such a huge turnoff, essentially, okay? So that's a big reason why the stock's gone down so much. The numbers haven't been crazy out of Chef. I mean, obviously, they're pretty much one of the fastest growing food companies in the world, and that's great. But it hasn't been like their growth rates they reported over the past year weren't like at a much better clip than everybody expected. Whereas like, oh my gosh, I can't believe they, were supposed to grow 30% and they actually grew 60%. It was nothing like that, right? So with that, it hurts for any type of hype around the stock, right? And investor momentum behind the stock. And then you postpone your last quarterly numbers. And then also, it was a retail stock for the most part. A lot of institutions haven't been able to build their position because it's a newer company, right? And technically a money loser on the bottom line. So it's a big support for retail. And a lot of retail said bye-bye to this stock. And so for those three core reasons, that's how you get the stock to go down 30% for me, right? Ugly. And so that's what happened there. Honest, oh, this is a confusing one, okay? Honest, I don't even know. Like inflation fears, the thing with Honest is they haven't had anything weird where it's like, oh, they, postpone their quarterly numbers. Nothing weird like that, right? The numbers have been tremendous out of Honest. I mean, really tremendous. They're like killing it. Look at their last quarterly numbers. They're taking market share. Their revenue numbers are better than expected. Everything's better than expected for Honest. I think what happened with Honest and why this stock went down so much is, I think it's important to do this video why these stocks are all still down so much. I think the reason Honest went down so much, to be honest, no pun intended, and the downfall has been nothing short of extraordinary when it comes to Honest, right? Nothing short of extraordinary. When it comes to Honest, I think the reason this one has gone down so much is they went public at the worst time. They went public, in 2021. And the peak FOMO cycle ended in January of 2021 and started to decline in February. And to go public when they went public, I think it was the worst time you could ever go public. I think it was, when was it? I'm gonna have to look up the specific month here. May of 2021 is when they went public. I wanted to make sure because I was thinking, was it April or was it May? So May of 2021, this company goes public. Worst time you could possibly go public as a company, and that's, this stock, it went public in the 20s, and now here today it's 5. There's just no support for a stock like this, obviously, clearly in the stock price, right? It hasn't been like retail's really gotten involved with it. Institutions, they take a while to get involved with a lot of these stocks. So it's just like literally no support while a massive leaving of the stock market is happening on the retail side. It was a worse time the company could have ever went public. But of course, when you set up an IPO, you set up that way in advance, like 6, 12, 18 months in advance. So you can't really dictate we got to go public at this specific time or something like that. So Honest just hasn't been able to get any support. Corsair Gaming has a few different things on why this stock's been hit so hard. Insane comps they had a comp against, right? Those comps end this upcoming quarter, which is good news. They got one last quarter of insane comps to comp against. There's this notion, this belief that everybody's going to go outside now and no one's going to play video games anymore. You and I think everybody on this that's watching this video, we all know that's a bunch of BS. Gamers are still going to game. But there's that thought process, right? GPU and CPU supply, this has been hurting Corsair big time. And the reason being is, essentially, if you're going to build a new PC, well, you're going to get a ton of Corsair parts usually, but with the CPU and GPU situation in a horrible situation right now, a lot of folks just can't do that right now, right? And so that's a holdback of Corsair's business model in a massive way. And believe me, this headwind's about to go to a tailwind starting in about 6 months from now. So that's the good news. And also, this was another big retail stock. There was a whole movement around short sellers and some big short interest, things like that. But at the end of the day, retail left this market in mass, and a stock like Corsair gets kind of left behind. So that's why those three stocks have gone down so much. I think it's very, very important to understand why these stocks have been hit that hard, right? Now, in 3 years from now, what would it take for these stocks to be the same where they're at now or down, right? And I'm still down a ton of money on these stocks, right? Well, with Tattooed Chef, in order for this stock to still be down this much or down even more, one is the company couldn't have gotten profitable. The two would be revenue stagnates or declines in 3 years from now versus, the incredible growth rates they have now, right? And innovation dies at this company. So now, what are the chances this happens? Well, I think it's extremely unrealistic for this company not to be able to get to profitability. Sam Galletti, he's always ran very, very profitable businesses, right? And so I trust that man's going to get this company to very nice profits. And when you think about it from this context, right? They don't compete at the low end of their products. Their products are actually at more premium price points. So as this company gets smart, and I've seen them consistently get smarter and smarter with their packaging and everything they're doing there, I think this company is going to be extremely profitable. And when you look at a lot of their products, look at something like, an Aussie Bowl, for instance. That's just one of a million products they have. It's hard for me not to see those products being extremely profitable. Target sells them for $4.99. Honest sells them maybe to Target for, I don't know, I guess somewhere between $2 and $3 roughly, right? Somewhere in there. It's hard for me to not see a situation where those products aren't extremely profitable. I eat these products on a daily basis and I love them, but I got to say, they definitely don't look like the most expensive products to put together, okay? So I think they're going to get to very, very nice profitability over the next 3 years. So I don't think that's super realistic, but if it is, and they can't get to profitability over the next several years, then the stock can continue to be a flounder of a stock and just do nothing, okay, or downtrend more. Revenue stagnates or declines. I think it's super unrealistic. I see what's going on in the real world. They're getting into more and more retailers, getting more and more SKU expansion. Their sell-through is ridiculous. And we've heard that not just from me, but from Target said it was the best frozen food launch in the company's history from Tattooed Chef. So sell-through is ridiculous. The brand's ridiculous. I don't see that being even remotely realistic, but it is a possibility. And if it did happen, obviously the stock would continue just downtrend, right? And if innovation died at this company, what I've seen is I've never seen a company innovating this fast in my life in the food sector. And so for that to just end, completely unrealistic as well, but it's a possibility. And so if those things happen, Tattooed Chef's going to remain $12, $13, $14, $10, $9 stock or something like that, okay? Very unrealistic, but it's possible. For this stock, they would have to, basically they couldn't get profitable over the next few years. Revenues would have to shrink and innovation would have to die and market share would have to go down. Now, I don't see that being realistic at all. They've been taking market share. They've been growing revenues very nice. So for revenue to all of a sudden shrink, not so realistic. Couldn't get to profitability. I think that's also extremely unrealistic. I think this company is going to be very, very profitable over the next few years. They've just been focused on taking market share right now. And it's like, if you got that market share opportunity, that's a bigger long-term opportunity for you. If you can get, 14% of this category that you used to have 10% of, that's a huge deal, right? So, I think they're going to get very profitable over the next few years. And if innovation died at this company, I don't see that being realistic either. They continue to come out with new products. You look at their SKU expansion in these stores over the last, 2, 3, 4 years. It's pretty amazing. So I don't see that being super realistic. But if it is, then of course it's going to be a $5, $6, $7, $4 stock over the coming years, and I would continue to be down. For Corsair Gaming, revenues would have to shrink year over year over the coming years. EPS, and I don't know why it says NTT income, it's supposed to say net income goes down over that time, and innovation would have to die. What we see is Corsair Gaming is such an innovative company, always coming out with new products, new exciting products in the streaming space, on the streaming hardware side with their Elgato brand, and on the gaming side, obviously, with Corsair's brand, right? So for innovation to die at this company is pretty darn far-fetched, and for net income and revenues to go down over the coming years is pretty far-fetched, and I'll get into that a little more in detail on some specific products that Corsair has that are going to be game changers for this business model over the next few years, okay? Now, so we talked about that in the downside, that what if I made a big mistake with these stocks and they just continue to go down over the coming years, right? So let me share now my 3-year price targets for these stocks and why I think they're going to certain prices. My 3-year price target, which would be February 21st of 2025 for Honest, is $20+ a share. It's one of the stocks I'm most bullish on in the entire stock market right now, especially in the small cap space. Basically, in order to get to $20+, they need to be doing a minimum of $70 million of net income in 2025 and be able to command a minimum forward P of 30. I think based upon this company's growth and what they'll still be growing 3 years from now, I don't think they're going to have trouble commanding a 30 forward P at all. I think most people would be very happy. If you look at the forward Ps at Procter & Gamble, Johnson & Johnson, companies like that, Kimberly-Clark trade at, with basically no growth, Honest will still be far outgrowing those companies, in my opinion, 3 years from now. So they should have no problem commanding a 30 forward P, and 70 million net income is, in my opinion, a pretty laughable joke for this company to be doing in 3 years from now, in the year 2025. So I don't see that, even being a problem. Those are my minimum. Keep in mind, these are my minimum numbers for this company. I have them doing a minimum of $70 million in net income in 2025. I have them at a minimum of a 30 forward P for this company in 2025. And if they do that, they'll be at a $20+ share price there, okay? Tattooed Chef. I have a 3-year price target of $30+ for this stock. I have them doing a minimum of $100 million of net income in 2025. They should be anywhere between $700 million and $900 million of revenue in 2025. For $100 million to hit the bottom line, I think is, like Curry from an open 3. I think that's going to be pretty easy. I think they should be able to command a minimum of a forward P of 25, which I think's kind of a joke there. And if I look at this company, they started their business as the least profitable space you can, private label frozen foods. Now they gotten into, obviously, branded frozen foods, still lower margins, right? But as the company expands more and more over time, the margins are going to be better and better. They're going to get into refrigerated products over this next year. We already see some of those on the Kroger website, which I don't know how those got leaked on there. That's kind of crazy situation. They're talking about getting into the snacks category, nutritional bars, those sorts of things, very, very high margins. So the margins of this company are going to go crazy over the next 2 years. 3 years even, the gross margins are going to go ridiculous for this company. And so net income of $100 million in 2025 is like I said, it's curry from an open three. It's going in, baby. And, forward P at 25 is not a high forward P that this company will command at all. I mean, I think it's very possible this company could command a forward P of 40, 50 at that time. 25, I think, is very, very low there. So, yeah, I have them at a minimum of $30 plus stock price in 3 years from now. Corsair Gaming, not my most bullish stock, but it also is one that I think has a lot of protection because they're such a profitable business model and they're so, well diversified as a business. My 3-year price target for Corsair Gaming is $55 and up. I have them doing a minimum of $200 million of net income in the year 2025. I have them at a minimum of a forward P of 25. I think as this company gets more and more established as a company in the public markets, they're going to get into more and more indexes. Obviously, S&P 600 is coming for this company. That's really exciting. I think Wall Street's going to understand that this is a more stable business model than they have ever thought, right? And they're going to see what, the management team just continues to execute. Andy Paul at this company has been leading this company for a long time, but not as a public company. And so as this company gets more and more known in the public markets, I think it will be looked at more as like a Logitech type company, just with more exciting growth than maybe a Logitech type company. And so that they'll be able to command a minimum of 25 forward P. And when it comes to Corsair Gaming, a DDR5 is a huge opportunity. And I want everybody to really understand how big this opportunity is for this company because Corsair is a big player in the memory market, okay? And so DDR5, think about it like this, right? With the next generation of all these chips that are coming out, you're going to have to pretty much get DDR5. You're not going to buy some high-end new PC and not have DDR5 over the next several years. And so this DDR5 opportunity for Corsair is ridiculous, and the margins are going to be insane for Corsair in this space over the coming years. Supply is going to be very, very constrained for at least the next 6 to 18 months. But as the supply, gets more out there, Corsair is going to have so much opportunity with DDR5. It's absolutely insane, okay? If you look at these, products right now, basically you got to try to get a notification when they're actually going to be out in the market. And so, yeah, this is one of the biggest growth vectors for Corsair Gaming, and they have so many growth vectors. Their streaming hardware, their cameras, their mics, all the gaming stuff is still a huge growth opportunity. But I'm telling you, DDR5, do not underestimate how big this is going to be. And I think everybody that's really in the gaming space and really understands this space well, I think they all get it. Like I've talked to several gamers over the past month or two, and they all get it. They're like, you're not going to get these new high-end graphic cards and whatnot without having a DDR5. Like that's just not going to happen. DDR5 is going to be a must over the coming years. And so Corsair Gaming is going to see a crazy multi-year cycle, essentially. I used to talk about Apple with the super cycle that was coming for 5G, and we've seen that kind of play out, right? Well, the next super cycle for a company like Corsair Gaming is DDR5 memory, and what that's going to do for Corsair's business model is absolutely massive. And these new chipsets, new CPUs and GPUs coming out, like what that's going to be for a company like Corsair Gaming is a game changer. And we have a supply headwind right now that's going to go to a supply tailwind over the next several years, and that's going to help Corsair Gaming out in such a big way. It's hard to even fathom, okay? If you look at a company like Micron, for instance, why has Micron been holding up so well in this market? In a market that is filled with companies with stocks that are at 52-week lows, with a ton of stocks that are at multi-year lows, with a ton of stocks that are at all-time lows, right? How does a stock like MU hold up so well in near 52-week high in this situation? Well, because everybody understands that the memory market is in a very healthy place right now, and DDR5's coming, which is just going to be another huge growth vector for a company like MU. And that's why a lot of Wall Street's basically, and this is a stock that everybody on Wall Street knows, by the way. Like, there's no hedge fund out there that doesn't know Micron, essentially. This is why they want to They believe so much in this company because they understand, memory is going to be beast over the next several years. And a company like Micron is going to benefit from that. The company a lot of people don't see right now because they're a little guy in the game is Corsair Gaming, and how much they're going to benefit is going to be absolutely tremendous. Thought I would just leave off with this Hungry Bowl app. We have an Instagram page, and they posted this here. That's just, beautiful when you get to see those sorts of numbers, guys. Never forget stuff like that. Make sure you also sign up for Hungry Bowl, our email newsletter. That'll be pinned comment down there. Much love as always. Hope you enjoyed this and have a great day.